ValueTrend clients are from all over Canada. Our clients are typically very risk adverse. The comfort that they derive from our process is that we follow a discipline, and that discipline keeps their money safe. ValueTrend is called ValueTrend because we actually have two sides to our equation. There is a value or fundamental research side to us, which means that we look at the bricks and mortar, the earnings, and the financial statements of the individual stocks and bonds that we look at. But we also are trend analysts, that is technical analysis. So we will look at market sentiment, market trend, behavior of investors, and look at these crowd behavior patterns, and make decisions based on both the valuations of the companies and the crowd behavior surrounding those companies and the overall market. So how we are different is that we have two registered analysts, a CFA and a CMT on staff, and it's two entirely different disciplines, and we do not interfere with each other. So we liken it to a Chinese wall between the two disciplines, and one does not interfere with the other, and both must come to the same conclusion independently on buying into or out or selling out of a position.
ValueTrend prides itself on the fact that we are not like the huge corporations and the huge investment management firms that exist. We are a smaller boutique shop that can cater to an individual and to their investments. We are small enough to be nimble and yet large enough to produce an offering that is beneficial to our clients.
From a tax planning perspective, when is the best time to convert?
You can pick up the phone and ask your portfolio manager, us at ValueTrend, exactly what your portfolio is doing, and we can talk to you about the individual stocks and the individual decisions we are making around those stocks and bonds, because there's no middleman involved. The size of our firm affords us the ability to be more personal with our clients, and yet the client's money is as safe as if they dealt with any large firm, because in fact the money is actually held with a very large firm at arm's length to us. So it's the best of both worlds.
I love that we're independent and we're a small enough firm that there's no bureaucracy to deal with. You know, if we have an issue, we can resolve it within minutes and move on. We have a great dynamic group of people. Everybody is specialized in their own field, yet we work very well together.
Keith's a very passionate investor, and he's a very passionate individual. He's passionate about everything he does. Working for a person like that, it's inspiring, and it makes you want to do your best.
To leave the job that I left to come here was truly because of Keith. He has high standards for himself and everybody else that works for him, and he's got extremely high ethics.
As portfolio managers, we do not earn commissions or have extra incentives to buy or sell. Whether we do 100 trades or one trade, we are paid the same. Our strict incentive is to do well by our clients, because that's the only way we can make money.
Keith Richards is on our show today, portfolio manager at ValueTrend Wealth Management. He will take your calls, emails, tweets, and video questions on technical analysis.
Approximately once a month, I appear on Business News Network television.
Tonight on Market Call, Keith Richards is on the show.
Keith Richards will be on the show. He's portfolio manager.
The reason I do this, even though sometimes people have said you're giving too much away, you know, you're telling people your secrets, but I think there is no secrets. You can go right to our website. We publish every single month exactly how we've done. And the reason for that is because we want people to see we're not hiding anything. We are very proud of what we are doing. Nobody can time the markets perfectly, but you can quantitatively identify risk. You can identify risk based on historic trends of the way investors are acting and by valuations, things like that. When we see that risk is outweighing return, we will raise cash And this is a big difference between us and the big brokerage firms, because their mantra basically is always be invested, buy and hold, you can't time the market. Over the long run, our track record shows that we're actually a lot less volatile than the stock market because we pull out, reduce our risk when the market looks risky, and then we actually have cash if it does in fact pull back, which is more often than not, our system is correct. It allows us to buy in at cheap prices. We have the cash to do so. Buy and hold managers do not. That's our basic approach. We always call it limit your risk, keep your money.